Good afternoon. This is Clark Neighbors with the BIS market commentary for the week ending May 30th, 2014. Just a brief recap, both from a weekly standpoint and a monthly standpoint on prices. For the week, July corn down 13 cents, December down 18, July soybeans down 21, November down 30, and the July wheat down 25 cents. From a monthly perspective, July corn down 55 cents, December down 53 cents, beans July down 18, November down 13, and the winner/loser, if you will, is July wheat down 93 cents. Moving forward in regards to weather, Monday we get our first glimpse with crop conditions. We'll see how that looks, but as a general rule, I think most people think the crop is off to a very good, excellent start in the majority of the Midwest. The only areas that you would say might be lagging or not seeing great conditions at this point might be some of the northern areas, Wisconsin, Minnesota, the Dakotas, etc. 6 to 10 day outlook at this point looks good. Above normal temps, above normal precip, which is a great combination in the early stages of the crop development. So progress is pretty well done as far as planting. I'll just let Mother Nature take care of the rest. Cash markets have been interesting this week also. Basis levels, both corn and beans, stronger basis. Corn, for example, eastern Iowa and moving east. Basis levels have been stronger this week. A lot of that's just due to lack of producers selling because of field work, because of the break in the market, and several other factors. We're still in some cases battling the logistical transportation problems, especially on rail in some sectors of the country. In other words, the motive or the mojo to get certain supplies from what would be called surplus or areas where there's a decent amount of quantity of the places that aren't, and those areas would be the eastern belt. Keep in mind basis levels along the delivery market are above deliverable values, which is having some impact on corn spreads. Strengthened in July this week, very evident with the spread. July SEP out near 7 to 8 cents inversion this week after ending last week at about 2 cents inversion. As we move forward on that corn spread, as we get closer to the delivery against the July, as long as this demand for the export trade continues to be solid off the river, look for that spread to stay fairly solid because we're above deliverable values. But on the other side of the coin, as long as we don't see any weather issues on this new crop, look for new crop spreads to at least hold their carries, if not build carries, as we go through the growing season. Soybeans, eastern processor, is having a tough time finding supply. You'll find areas that have the shortest amount of beans right now they've ever had in stock from a commercial standpoint. But in saying that, we continue to see stories about shipments of imports. So far there's been 7 vessels unloaded here in the United States. Last report we heard was 3 were en route, 4 in a lineup to move out of South America, and possibly another 6 or 7 that have been sold and are not in the lineup at this point. Whole crop beans continue to be the driving force in that bean complex. Much of the news stories we hear on beans are the same stories we heard 3 weeks ago. They seem to get regurgitated. The only thing that's changed is planting has pretty well taken place and is done. But from a bean standpoint, a lot of volatility in the front end of that bean market, and keep that in mind as we go forward. Some of the outside market stocks this week hit all-time highs. Gold is at a multi-month low, and the dollar index continues to be very quiet, chopping around that 80 area, and we've been in that range for quite some time. So the dollar has not had as much impact on the commodities of late that we have saw in recent years. The other thing to keep in mind from a volume standpoint, there's a lot of open interest in the July contracts. About a third of the open interest in corn and beans is in the July. We're in the midst of some of the managed money rolls, some of the fund rolls, moving those long positions out to deferred months that may have some impact on spreads. The other thing to watch is we still have a fairly decent sized length by the managed money some of these ag commodities, specifically soybeans, meal, to some extent corn, and also in the livestock sector. It'll be interesting to watch if that flow of money continues to hold in the commodities, specifically the ags, or it looks for another home. As far as the livestock sector, cash trading cattle this week 143 to 145. Still a pretty good premium cash over futures. That's a supporting factor of this cattle market for the month of May. Feeder cattle were up nearly $10 on futures. Live cattle up about 40 cents. Same time the hogs, front end of hog futures, were down $10. So the meat sector continues to be solid, but has a tremendous amount of volatility. Lastly, producers may want to continue to watch old crop inventories. Basis levels are good in a lot of areas. Definitely keep that in mind. Also, from a new crop perspective, keep in mind the bean-corn ratio. The price of beans is about 2.7 to 1. The price over corn, something more normal in that standpoint, might be 2.5 to 1. A lot of that's due to the strength in this old crop bean, keeping that ratio out in those kind of levels. And that could have some impact on some of these later planted fields in the north. You may see a few more bean acres because of that. Last but not least, we've seen some pretty good pressure on corn this month. As we mentioned, down 55 cents. In some cases, from a seasonal standpoint, corn almost looks like the pattern you would see in June as the crop's being developed versus in May. Now keep in mind there's 2 years to watch where we didn't really get much bounce in the corn market during the growing season, and those years were 1994 and 2004, and specifically those were years where we had record yields. Not to say we're going to have any record yields this year. We don't know. It's a long way to go with this crop. But those are 2 years where the market really never gave us another chance or another bounce much to sell later in the growing season. I think that's something to keep in mind as time wears on. If you have any questions, feel free to call us here at the office in Cedar Rapids, Iowa. Phone number is 800-373-2525. Check us out on the website, BIScommodities.com. With that, have a great weekend.